It is Wednesday, October 12th, 2016. This is Ron Feinstein, the Consummate Price Behaviorist with New Wave Forecasting, with a little R&R of today's holiday markets and what I think is coming down the road. And frankly, no real surprises. Starting off with the crude oil, the market has waffled lower in what appears to be a corrective fashion, keeps coming down, and whenever it's oversold, it stabilizes. If this is a bull leg, then a test of 49.20, which is about a 38% retracement, and the last low should hold. So I think we should be open-minded and view this as a courtesy dip, because even if it's not going to run up and make a new high, which would be the ideal forecast, I think we'll at least bounce. So I think we've got to consider the test of 49.25 as a courtesy opportunity here, and look for the potential for the market to trade up to a new high again. We'll see what happens. If it happens to crash through $49, then this will turn out to be an ABC, and it's just done going up. But again, all going to hinge on if the market can hold 49.25. Moving on over to natural gas. The forecast is so far simply a thing of beauty. The courtesy dip scenario going into the report tomorrow. Geez, what a surprise. Every time there's a report, we're looking for a 4 or a 5 or something like that. So I still think we got a good chance for a washout of 315. You know, we did already wash out 320. That could have been enough, honestly. Just don't know. But again, got to know this market loves to hurt people. There's no momentum divergence on the downside yet. So with the number, maybe we'll break 315 before we head back up to 330. So this is certainly a market you want to be watching tomorrow. Okay, moving quickly over to gold. The market has, again, this 1250 number does seem to have attracted a fair amount of attention, and that, again, is precisely what concerns me here. I don't know what to say. We've got good momentum divergence, but it still looks like it's nothing but a consolidation triangle. So again, I think we'll just key off this 1266, 1268 level. If we can blow through there, then yeah, something's bottomed. Otherwise, I am not by any means convinced we aren't going to take another dive here, and that could have a lot to do with the euro. So we'll shoot right over there now. Okay, we are getting very close to the 110 level, which is pretty much all that was left after the market kind of fell through the 76% retracement. And frankly, there's just not much here to say other than the market still looks bad. Probably going to find resistance still in the neighborhood of 110.75, 110.80, and I'm not convinced that 110 is going to hold here. This is just not trading well. So just have to say, barring at this point minimally a push above 111, this is just lower prices continue to be the forecast. You know, the 10-year count did put the market in a terminal wave, and although it was kind of short compared to the length of wave 1, it certainly did meet and complete satisfactorily the count. So right now, this is really important. We're at resistance here. I can identify real time here, right here at 130.05, 130.06, rising resistance line, as well as the apex of the previous fourth wave triangle consolidation. So if the market is remotely bearish, it should stop basically right here. Anything else is bullish, and not sure how much better we're going to do, but it wouldn't really surprise me if we head on up initially to 130.12 and then probably closer to 130.20. So again, it's really clear here we're at a critical resistance level right now, real time here on the 10-year. Falling back below 130 would probably be an indication that not a whole lot of buying is really behind here. You know, moving over to the stock index futures, I like to think that I make spectacular market calls every day, but honestly, this could not have laid out better given the forecast that I was looking at. I thought we were going to work out a B-wave triangle, fail near 2165, and head on down, and the actual high was, I guess, 2163.50. So we can shoot me for that one. And now the first target here on the downside, 2115, we're basically there. You know, I don't know if this is going to be it, or if the market is in much more dire straits. There is certainly a whole lot of bearish chatter out there, and the inability of the market to move above the pattern resistance here today was certainly telling. But we'll just have to see. I am not by any means convinced this market's in a disaster, but it could be. And I would argue that if the market gets creamed today, and by that I mean perhaps closes below, say, 2110 or worse, then yeah, we could be very well in the middle of something that could get really, really ugly. But I need to keep in mind now that we're right within a couple points of the 76% retracement. And if we don't turn up from here, then the market will likely accelerate on the downside. I was watching 60 Minutes the other night, and they were talking about the IBM Watson computer, and I was thinking back to the days when I used to play tournament chess, and I actually played Big Blue, which was IBM's world champion computer at the time, and I did beat it. That's not a great victory at the time with ancient technology. But after reviewing what Watson could do, I was thinking, gee, would Watson have been bullish on this break of 48.50 and had the target of 4900 that I was looking at for this entire consolidation? And, you know, whether one believes it or not, if this was a rising wedge diagonal triangle, the objective of 4800 was already met. So it does look like a 5-wave decline, which would suggest that there's probably further weakness ahead. Just a question of whether or not there might be a recovery. So I think, given the interesting big figure syndrome we're seeing here, figure 48.50, the new ceiling, and watch 47.25 as the 62% as the next high probability support area. And again, the market could come back. Don't think it's a bust yet, but we won't know until we have some more information tomorrow. So that's it. That's a wrap for me on October 12th, 2016. Ron Feinstein, New Wave Forecasting.